Welcome back, folks. In this video, I want to talk about the gold trade long position that I took earlier this week on Thursday. So it's posted on my Twitter feed, and I want to walk you through the premise of the trade. Okay, so you're looking at a 4-hourly chart, and we had a pretty large down day on Friday. And when we opened up on Monday, we did not take out that Friday low. Instead, we started to move higher, which indicated a bullish bias, okay, for the next couple of days. So we can see that we are moving higher at the start of the week, and each one of these down candles is coming into a gap and also into an bullish order block, okay? And we are moving higher, okay? We're moving higher. Now, notice that here we have equal highs, right? A high there, consolidation just under these equal highs, and so we get a nice move up. Now, I wasn't trading any of this to the upside, okay? Because I'm waiting for the news. We had news on Thursday, 8:30, and that's essentially what I was waiting for. So now we start to move down, okay? Wednesdays is typically a key reversal day, midweek, okay? So we get a reversal on Wednesday. And then Thursday is this day here. Okay, now we're going to jump into the lower time frame on Thursday, but what I want you to see is that on Thursday, we dump down, this is all before the news, into this order block, okay? So the market takes out all these liquidity, okay? Jumps down into this order block, and there's also a fair value gap. And that was the premise of my long, and I'm going to show you why that was the premise. So I'm going to put a line at the open of that down candle, and we're going to put a line at the open and the high of that down candle. That's where I want to see the market come into if I'm going to take a long position. You can also go inside that body of the down candle, but the most sensitive areas are going to be the high and the open of that down candle, and we have the gap there as well. So that's where Monday has come into, and that's why I have taken that long. But I want you to see how this looked like on a 1 minute chart. And I did post that up here. Okay. Also, I posted before the entry, okay, that I was looking for that as well. So here is before the entry, I was looking for that target. Okay. So posted it prior to the entry and then posted it after the entry, the result. Okay. So that's what we're walking through today. So I see this massive dump on the day. Okay. On Thursday, start all day, the market's just been going down, 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 down. And this is what I do want to see on a news day. If I'm bullish on a market, I want to see a dump prior to the news. And this is exactly how I traded my pound trade that I've also created a video for you on. It's also posted on my Twitter. Let me see if I can find that. The pound trade that I did was exactly using the same strategy, okay? Can't see, there it is there, right? So there I posted this. This was also a dump prior to the news. Now that in this video, in the pound video, I explained that's not the only reason. There needs to be a bullish bias, and I explained in the pound video why I was bullish on the pound. This is more just a confirmation and a better entry prior to the news when you get that. Just like what I did for gold, I also posted the results for the pound trade afterwards as well. So the pound trade was exactly the same setup as the trade I'm going to walk you through today in this video on gold, which I did last Thursday. Okay, let me just bring it back up. So it's this one here. So it's not just the fact that we had a dump prior to the news, right? That just helps me with entry and gives me confirmation that we are going to go higher. Okay, it's all the reasons I mentioned in the pound video on why I was bullish on the day, and the same reasons apply in the gold video, this one here, on why I'm bullish on the day. So on a 4-hour chart, I started to see bullish order flow. Okay, prior to the news dumped down into a bullish order block. Okay, on the 1 minute, this is how that looked like. Okay, so there's those two horizontal blue lines. It came down into the high of that down candle. Okay, and I started to see bullish momentum, right? This little price action here is what I refer to and what is commonly known as in the industry as a balanced price range, because we have sell price delivery and buy side price delivery inside that range. And if I put a line right here, okay, you'll see that's where the market has been coming down into and holding, and that's where the institutions are accumulating their positions. And this is also where I also accumulated my positions prior to the news, and then we get this big move up. My target on this was just up to these equal highs. Okay, so I'm just going to put a line up there. That's what I was targeting. Let me change the color of this line. Okay, and that's exactly what I had put up on the charts prior to the entry. I'm just targeting this level. I know we're going to go above that because there's a lot of stops above there. Okay, but I want to target the easy exit. I don't want to try and predict the highest high. Okay, and I'm glad I did that, and that is my way of trading, because you can see that on that day we did go high, but the day closed lower. So if I didn't take my exit, it would have been a losing trade. Okay, so that's the premise of the trade, using a 4-hour chart, looking for the dump prior to the news, and then looking for a safe entry stops below the order block, so under this blue line. Okay, now as I said, it's not just on the fact that we get a dump prior to the news. This could have gone the other way if direction was not bullish, but we had a nice dump day on Friday. Monday didn't take out the lows of Friday. Okay, so we are bullish, and those lows are most likely yet to come. And we can see we have bullish order flow on this 4-hour chart. Down candles are supporting price. This move down is expected prior to the news because they want to take out liquidity prior to that move up. Okay, now that was the premise of the trade. Okay, got a dump into a key level already marked prior to the 8:30 news volatility, and the entry was based on looking at this balanced price range and seeing that the market is giving institutions multiple opportunities to get in, and so I want to get in with them. And then just seeing this dump kind of confirm that, and a nice easy target to spot out, which is the equal highs. Okay, this eventually went higher, but I'm not here to get the absolute best high. I want to get the easy exit, and as you can see, the trade was profitable. Okay, that's enough for me. I don't have to chase the exact high, and you can see on that day it actually went straight back down. Okay, so that's why if I don't take those profits at logical levels, then I risk losing on the trade, and this trade actually went lower than the entry. It continued to go lower. Okay, so you've got to have key entries and key targets and not get too greedy. Okay, now let's talk about where gold might be headed, right, longer term. So let me take off these lines. We don't need them anymore. Let's not clutter the chart. So I do have a line already on the 4-hourly chart where I believe gold is headed. I am bearish on gold. Okay, I do believe that we are headed lower, and I believe that this current move that we are in is headed up to 2354, this grey line. Okay, I believe that is the current draw on liquidity. Okay, and if we look at a daily chart, that 2354 comes in at this last up candle and will completely balance price, and that is also the bearish order block. Okay, now you might ask, why can't we go up here? Well, we are in a price behavior, like a model where price is expected to go down. This down candle, I've mentioned this on many videos, that once we break through this swing, okay, then the last up candle prior to the highest high, okay, this move up, the last down candle acts as resistance, and so I'm not expecting price to go back up. This is just the balanced price range on the other end, just like we had on the 1 minute. Actually, let me go back and find that for you. Let me find that. Let's just quickly find that. I've taken off those blue lines as well. Where is it? It's going to be a little bit hard to find. It was Thursday, so we're pretty close. There we go. Okay, so just like this was a balanced price range, you got sell price delivery, buy price delivery, okay, and then you have support on this line. I'll just mark it for you, okay, because that's now balanced price. There's no need for the market to go back into that range. On the upside, right, on the daily chart, let's go back to the daily chart, that is the same, okay. This is the balanced price range, and we've already kind of tried to go up into that and came down, and this level, let's draw a line there. We've already got a line there, so that level there now, which is the last down candle, is going to hold price, okay. We've already had a move down on last Friday, and that's come in from this level, right? Just like on this balanced price range, there's a wick and it's holding price. On the other end, we've got this wick and it's holding price, okay? And so this is the kind of only gap that's remaining, and that's why I've got that line there, 2354, okay, where I believe we're headed up into. It doesn't have to, this is very important, it doesn't have to reach all the way up there. So, you know, once we get above this level, you want to be careful if you're holding any longs, because we could reverse from anywhere above that level. Doesn't have to go and touch that point, okay? That level has come from a weekly chart. If I look at a weekly chart, I've taken this massive wick and I've measured the midpoint of that wick, and the midpoint of that massive wick is there, okay? 2354. So I don't expect price to go above there, okay? Because we are, if we look at what this is on a monthly chart, a swing high, which means we've got a high, a lower high on the left, and we want this to be a lower high on the right. So this, you know, should not go above this high, and the logical place for the high to come in is just at the halfway mark of that wick, which I've marked on a weekly chart, 2354, and that's where this daily level comes in at, okay, there, right? So that's where I believe we're headed. As I said, we may not get up there all the way, okay? So on the 4-hourly chart, where we are headed next, I think definitely above this level, okay? That's the current long, that's currently in place, okay? And I'm going to talk about where we might be able to get a safe entry for a continuation, because going long here, expecting price, we're expecting price to move up above that and possibly up into this level here, but going long from here is just too close. It's not enough of a range. So we want to see a pullback, and I'm going to give you a level of where that pullback might come into, okay? So there's also a gap here on a 4-hourly chart. We should notice that. And we have these order blocks, okay? So these are good levels for price to come back and retrace into, okay? What do we have on a daily chart? We don't see, and this also we have a daily order block. Let's put some lines here. So here we have a daily order block now. Okay, let me make this a full line. Okay, on the 4-hourly chart, we have this nice gap. So there's our daily order block. Okay, we have this nice gap as well. We could tap into that level as well. So you got to watch price next week to get a nice entry for a potential target of at least above this level. Let's put a line there too. Okay, but I do want to see price get higher and closer to this 2354, if not exactly to the 2354 level. Okay, let's look at a 6-hourly chart so we can get a nice better entry. Levels are pretty much the same. 8-hourly chart. So just trying to see where we might be able to find better entry on some of these charts. Let's see. What do we have on an hourly chart? Okay. So on a 4-hourly chart, a safe entry would be on this hour, the daily order block that we marked out here. Okay. I also like to enter just on these wicks as well. When you have a large candle like this, then this is a level. I'm going to just mark it out here, and I'm going to mark that in a dashed line. That's a level that institutions will most likely buy from that level there. Okay, because that is basically the start of the gap. Okay, that is where the gap starts. So what institutions do is, because you don't know how far deep the gap, the price is going to be repriced to balance this, either all of it or half of it. What institutions do, as soon as we get a movement under that low inside of the gap, institutions buy. So that's probably what a good entry would be on a 4-hourly, to learn about how this price may behave. Okay, so we're learning how is price going to react from the daily order block or from this institutional entry level, which is basically at the start of the gap. And what they wait for is just 1 pip under that for a long entry. They don't wait for movement too deep into the gap. Okay, but this is also a nice level on a 4-hourly, but the high of that 4-hourly order block is aligning with the daily order block. Okay, so I wouldn't want to kind of wait for price to move too deeper beyond this level here that I've got on this 4-hour chart. Okay, for a potential movement back up at least to this high and somewhere close to 2354. Okay, that's not much of a range. Okay, from here to that high, well, it's not too bad. It's about 200 pips. That's not too bad. So let's jump down to a 1-hour chart. Okay, so we are looking for price to get down to the daily order block, and if we can, down to this level as well. Okay, now something else I want to point out is you have a low. Okay, I've mentioned this on other videos. We have a low here, we have a high, we have a lower low. Okay, what's expected is a lower high and then a down move. Okay, so that will be the trend. The trend would typically be low to high, lower low. Now this should be a lower high and a lower low, but we haven't done that. We've got low to high, lower low, but we've got a higher high. That means this level, the previous high, is now support, and that's what we can see. We can see the market supporting at that level, and now notice that support, okay, that I've now just taught you about, is aligned with the daily order block. So there's a few things aligning with that. Okay, so what I'm going to do is drop down to a 15-minute chart. Okay, let's see what we can see here. So here is our low, high, lower low, higher high. Now this candle, this last up candle, will hold price. Okay, that's what we're seeing. We can see we're already tapping into it. We can see that the institutional entry is inside that last upside up candle as well. And we can see that the daily order block is also around that level. Okay, there's a couple of confluences that give me a bit more confidence in that level. Okay, so we are looking for high prices in gold, but we need to be a little bit careful. Okay, because I do see lower prices with this trend that's building. I don't see prices for going higher for too long. Okay, so you need to be careful. I probably, if I'm trading this to the upside, I'm only trading a third of what I normally have on my position. So if I'm doing a 10 lot, as you know, I usually do a 10 lot, then on this position I might just do a 3 lot. Okay, so 1/3 of my typical size, just because of the elevated risk, because my longer term, higher time frame bias on gold is bearish, and I see all of this movement as a pullback wherever it's going to end. I think it's going to end there. I see all of that as a pullback for a larger move down, especially to the previous Friday, okay, and previous Monday lows. Okay, that's kind of what I'm seeing for my assessment. That is Friday 7th of June, okay, and Monday 10th of June. Those lows are still intact, and to me that indicates that this is just a pullback for continuation to the downside in gold. Okay, so I hope the video is useful. The purpose of this video was to walk you through this trade and why I was confident in taking that trade. You can see that was a full lot, 10 lot. In fact, I did more than 10 lot. I entered more somewhere along the way. Yes, there's a 15 lot in total. I entered another 5 lot, probably when I started to see that we were starting to move up. Okay, so it's for that reason that I had the confidence in this trade, because of the high time frame analysis, right? The 4-hour high time frame analysis. This is the 1 hour. Let's jump to the 4 hour. Okay, this higher time frame analysis, where we're coming down, dumping down into a bullish order block. Okay, into here, right there, and coming inside of a fair value gap, and we're dumping down on a day right prior to the news. So we're coming into support prior to the news, but that's not enough. I then see on a shorter time frame we're getting a good reaction, and it's a balanced price range, giving me more confidence that we're not going to go back down through there. So it was a nice, easy trade, in my view, based on high time frame, looking at what's going on the day prior to the news, using and knowing that the news will be a volatility injection, seeing these equal highs, okay, and already kind of being bullish on gold with this higher time frame monthly chart analysis that we are heading up to 2354. Okay, not only that, but then on that day we've had from Wednesday onward moving down, and so I was already thinking then that is a false move, right? So we had a false move up start of the week, false move down Wednesday, Thursday. Okay, because I'm already expecting bullishness to 2354, right? So this I didn't trade. Okay, because I'm assessing what is the market doing here. We're establishing bullish bias. Okay, then waiting for liquidity to be taken, which it did on Thursday, although I longed Thursday for the move up. Okay, and getting out quickly, and then the down move, taking out the liquidity into this order flow, bullish order block, taking out anyone that's already long, and now the real move begins, and this should continue all the way up to 2354. And for your study, I want you to study how does price behave. Do we get a pullback? Here's what you think about: is the market moving to allow opportunities for institutional traders? How do we confirm that? Well, is the market going to come back down to this daily order block where the institutions will buy? Is the market going to come down to below, even if it's just 1 pip below this low here, inside of this big candle, which is where the institutions bought, to give them another opportunity to buy more just under this candle inside of this, right? They're two things I want you to look at for the market to continue higher, giving opportunities to institutions to get in on that move before going to its ultimate objective, which I believe is 2354. Okay, rewind the video and watch it again. In particular, what I've said about the high time frame analysis, why I believe 2354 is going to be the high time frame objective. Okay, so why am I bearish? Well, we've had down moves, right? I've spoken about this. We've had the big down moves that's broken swings, right? Structure's broken. This to me is just a pullback to balance the market to go back down. Okay, so once we balance and we get the right news days, the right time, I expect the market to go down below this swing low at a minimum. Okay, obviously Friday and Monday's lows also, but I think we'll continue going down below this level 2286 and even lower, but I'll talk more about that once we start to move down. Okay, so I want to talk with you in a future video.